Hey everyone, my name is Shiva Kittasamy and I'm with the University of Nevada, Reno Extension. I'm an instructor here at the Small Business Education Program, and we got an exciting video today talking about tax planning for your business, or in other words, some tips on how to not get audited by the IRS. So let's get started. Also, I forgot to mention that we have many other types of resources, such as in-person classes if you are here in Vegas or Southern Nevada area, which there is a list of all those classes for that month at extension.unr.edu/BizDev. We also have a cool BizLife podcast where we have different episodes with different business professionals giving you the best advice possible to help see your small business or startup grow. So with that being said, let's keep getting into it. All right. So the first statistic I really want to put out is talking about the IRS. So before we get started with any of the real tips or tricks, we first got to have a couple foundational elements discussed in this video. So the first one is, what is the IRS? Well, the IRS is the Internal Revenue Service, which is a bureau of the Department of Treasury, and they are responsible for collecting all of your taxes and enforcing tax laws. They are, in a nutshell, the tax man, as I like to call them. All right. And one little statistic is, in the fiscal year 2020, the IRS collected almost $3.5 trillion in revenue and processed more than 240 million tax returns. That's insane. And more importantly, as we can see from this statistic, there was a lot of tax activity from the IRS because of the fact that people were misfiling their taxes and deducting stuff incorrectly. As you can see right there, there was about $39.6 billion in total of audits conducted by the IRS. So I want to change your perspective on taxes with the IRS and kind of see this as more of a tool, because even though we're trying to set you up for success with the IRS, which can be daunting, these tips actually will also help prepare you for if you want to get investments from private lenders, or even get loans from banks, or even open up bank accounts. It's going to be really, really crucial in learning these tips and tricks that I'm about to teach you today. And yeah. So here are my 5 tips to avoid an IRS audit. Tip 1. Keep accurate and detailed records. I want you to track everything. So receipts, invoices, bank statements, payroll, track it all. It's really crucial that you do this because if you do get audited, it will actually show up. You're able to prove something that might have been concerning to the IRS. And also tracking everything also make sure you're under the radar and don't really get blown up and a big concern to the IRS. And one easy way I always suggest to individuals that have businesses is just use accounting software. Software like QuickBooks has an app where you can actually scan all of your receipts, be able to track all the invoices, all the transactions being done. It does a lot, and it automates a lot of that stuff. So I would recommend getting some accounting software if you can. And make sure you have accurate records so you can claim both your income and expenses properly. Tip number 2, report all income. So I want you to report everything, okay? Even the smallest amounts it's best that you report it. And I'll give you an example. I had a startup myself, and we weren't making crazy amounts of revenue, but the smallest amounts of revenue that we were making from our initial like bootstrap version of the platform, I made sure to report that in terms of that income when I was filing, because we were a C corporation. And more importantly, I always recommend this to everyone that files for taxes. Make sure you're reviewing your bank statements. And my biggest tip for this is do it every week. And if you can, do it every day. So first thing in the day, if you can, review your bank statements and make sure everything's done correctly, because there could be a chance that you purchase something accidentally on your personal credit card or your personal bank account, and it was supposed to be purchased by the bank, your business bank account. So make sure you're regularly reviewing all those bank statements to make sure it's correct and good to go, because that will look sus to the IRS. And this is what I tell people. The IRS sees everything, okay? So don't try to escape it. The IRS will find out, all right? Tip number 3, stop deducting everything. Now, I don't know about you, but I've seen some of those like big like TikTok videos or just videos online where you'd have some crazy deductions. And don't listen to that. And why I say that is because that is actually a big red flag for the IRS. They will see that if you're deducting crazy stuff like a personal chef, for example. I've seen that. They will come and audit you, because that is really not business-esque for deductions per se. So avoid excessive deductions that look suspicious, like travel, meals, entertainment. But if you do happen to deduct any of those, keep a detailed record of those business expenses. So write down what you were doing, for what you were doing that for. Get as detailed as you can. And I believe in the accounting software, you actually can put notes down of those activities, so you can have it for your safekeeping, for your records. And make sure that the deductions, get them clarified by your accountant, and make sure that they're airtight, because the moment it's, kind of leaning towards an excessive deduction, that will not look good on your part as a business. So just make sure you have things airtight, if anything, and it will help if you have a detailed record of everything. So Tip number 4, use care with independent contractors. Now, my startup that I had, we actually used independent contractors a lot. And they were great. They're a big asset to us. They definitely help run the business, the core functionalities of the business. However, you have to make sure that you're knowing the difference between an independent contractor and a W-2 employee. Because not only are there different tax guidelines, but there's also different ways of how specific policies you can give to those individuals. For example, you can't give a uniform to an independent contractor, whereas you can enforce a uniform with your W-2 employee. That contractor is just there to do one piece of work, and that's it. So you can't really enforce it. You can encourage it, so same thing with tax guidelines. There's different tax guidelines, and there's specific thresholds that you want to know of for 1099 individuals, where I believe it's $600, where if you make more than $600 for that year, you're required to file your 1099 as an independent contractor. And the business who is giving that work to that independent contractor has to provide that tax statement to them. So make sure you brush up on what those different tax guidelines are, because if you are not doing stuff properly with filing taxes for them and mixing them up with how W-2 employees are, that is also a sign for the IRS to audit you, and that is not fun. So make sure you're ensuring proper classification and documentation. All right. And tip 5, probably one of the most underrated tips out of these ones, but watch those big donations. We as individuals, as business owners, love giving donations. We love donating. We love giving back. Personally, I love giving back, but we got to be careful of donations. So make sure when you're doing donations, they are proportionate to your income. And, like I said, keep all your receipts and documentations for all the donations, all right? Because you're going to want to present those documents, those tax-exempt documents that you get from those organizations for when you're filing for taxes. So I would say, the biggest lesson, out of all these tips, I would say, is record, report, review. If you follow those 3 key words, you're going to be fine. I think with the IRS, oftentimes us business owners, it gets very overwhelming and scary. And, I feel like if you are having detailed records, if you are staying up to date with what you're doing and being very involved with your accounting, you're going to be fine. The IRS is not going to be on your tail. And more importantly, it's going to set you up for success for when you are going through those private lenders, for trying to get a business bank account, et cetera, et cetera. It's just, you're going to have a better uphill battle. So with that being said, this is a short class, very much. Thank you so much. Again, if you did want to learn more about our resources, we have many more classes that we offer here at the Small Business Education Program, both in-person and virtual. The in-person classes are going to be here in Vegas at either our North Las Vegas campus or our Paradise campus down on Paradise and Windmill. So make sure to come in. I would say in-person classes are probably the best format to truly ask your questions, because for the most part, at least for my classes, I like having it as a conversation, and we can't really do that on video format, but hopefully this video was very helpful for you, and there's many more other virtual videos on our virtual classroom. And like I said, check out that BizLife podcast, as there are some really cool deep dives on things that you might not have considered as a business owner. So that being said, I'll see you guys in the next one.